So, good evening, students. Very good evening. Welcome to the 2027 fast track classes. So, today is the last class for the month of August. And today, your brothers and your sisters, which means in the 2026 A level batch, are doing their part 2 paper. Okay? Part 2 paper. So, just give me a second. Okay. So, next year on the same scenario, on the same month, you guys are going to do your A levels. I think in the last week, in the last mm, Tuesday or something, the last week, the examination department have shared the news that your A-level exam, 2027 A-level exam, which will be held on August 3, I guess. Okay. So yes, your dates are confirmed now, and don't worry, your exam will be held as scheduled. There will be no chance to postpone the exams. Okay. So now it's your time. Okay, even if you are not prepared till now, just start by today. Even if you start now, you will have around 11 months before your exam. So that 11 months is very much enough to get a pass for accounting. Okay, so yes, if you are not good enough in the accounting, don't lose your hope. Still, you have time to pick it up things. This is an excellent program for you all, those who missed the previous sessions, those who are not good in the from the basic stuff. Okay, from the basic stuff. So this is a very good opportunity for you all to pick up your basic knowledge as well as to get more things. Okay, understood? So yes, so still you have time, still you have lot of time in order to pick up things. So don't lose your hopes. So in the last class we have discussed this thing. What? The 4.1 theory notes. In the last class we have started the unit number 4, and we have started these prime entry books, I guess. Okay, so the prime entry books and the source documents and the records, all these things have been discussed in the last class in the end, okay, in the last minutes. And today we are going to discuss this what? We'll start off with the sales journal. Okay, I will explain what is this sales journal, and I will explain those stuff. Understood? So yes, give me a minute. Okay, so let's start off with this beautiful journal, sales journal. This sales journal. And sales journal is what? Sales journal is the journal which enters credit sales. In the last class we have discussed now. Sales journal is what? Which enters the credit sales. So in the sales journal, in the page number 2, what is meant by this sales journal? Sales journal records all the credit sales goods held for sale. Held for sale means goods which we are going to use for the selling purposes. Okay. Cash sales and the sales of non-trading assets are not entered here. Please highlight that cash sales and the sales of non-trading assets, which means the non-current assets, are not included here. Understood? Okay. The source documents for the sales is the sales invoice. The source document for the sales is the sales invoice is the source document. Source document is sales invoice. Sales invoice will be your source document for what? For the sales journal. Yes. The letters are visible, I guess. Yes, the letters are visible. Okay. And the sales invoice contents are there. Okay. So the contents are there. I will draw a drafted sales invoice, so you will understand what is meant by this sales invoice. It's not, this is an additional knowledge. Okay. The examiner was want us to draw the sales invoice, but just in case, just for the knowledge purposes, just draw this. Okay, the sales invoice. So this will be a sales invoice. Sales invoice heading. Okay. The date and the invoice number is there. So in here, you will get the date and invoice number. Invoice number will be here, and the customer name. Okay. So in the description panel, the description is there. Okay. And description, quantity, and price. Okay. There will be a separate table and discounts. All these things are available in here. Discounts and the trade discounts, all these things, and there will be a total and net total and the gross total. Here there will be a signature panel. This is your drafted sales invoice. Here you will get the signature. This will be your drafted sales invoice. This is how the sales invoice looks like. Okay. So this is your source document, sales invoice, and the sales journal. And this will be your sales journal. The sales journal is always looks like this. Okay, the format is there. The format is there in the what? The tute. This will be a sales journal. This will be your sales journal. Description, and then invoice, ledger number, amount, VAT, total. That's very much enough. Amount, VAT, total. This will be a drafted sales journal, and in the tute you can easily see the dates are there, the customer name and the invoice number, ledger number. Actually, the ledger number is not not that much of needed, but the invoice number is needed. And the amount, VAT total, this will be the simple format. This is the simple format. Understood? And then we'll move to sales return journal. Just a brief knowledge. Huh? I will do questions, don't worry. Just a beginning. So what is this journal and how this journals are looks like, and we have to give some basic knowledge in order to understand some things in a better way. Understood? So first, the business will be preparing the sales invoice. After that, the sales invoice details are converted to sales journal. After the sales journal, you will be creating the T accounts. The T accounts will be discussed later. Okay, so don't worry. Yes, after that, we'll move to sales return journal. Yes, sales return journal. Sales return journal. Look at the dude. Sales return journal records goods returned by the customers. Yes. Which in the sense, goods returned from customers. The other name for the sales return journal is return inwards. Return inwards. There's another name. Return inwards. Return inwards. Coming inwards. Sales return. The source document is credit note. Credit note. Since the sales are credit, sales return will be credit note. Understood? So you don't have to worry about the source document for the credit note, but I will draw the credit note as well, the format of the credit note. You will need it, you don't need it, but it's the extra knowledge. It's better to understand, it's better to learn credit note. Wedding ඉගෙන ගත්ත කියලා ඒක මුකුත් මොනවාද ලොකු බලපෑමක් වෙන්නේ නැහැ නේද? It's not a bad thing නේ for studying more things. கூட படிச்சோம்னு சொல்லி எதுவும் பிரச்சனை நடக்க போகாதுன்னா. So yes, just get a knowledge about what is this credit note. Okay, this is the only class and this is the only day you will get the extra knowledge about these journals. In the next classes, I won't explain to draw the credit note. I won't explain these things. Okay, just a beginning. In the basics, I want to give the full knowledge, because when you go after this A level, you will be fully fulfilled with the knowledge of the accounting. Okay, so these things are needed when you do your jobs and those stuff. The format and how it will be look like, basic knowledge is needed. Understood? So that's why. Same as the sales invoice, there will be a number. Always there is a number for the credit note number, and the date, and the name of the customer. Okay, same as like this. Description, amount, quantity, total, will tell like price, and here total, and here signature. Exact format like the sales invoice. And the journal also very much similar. Journal format also very much similar. This is the journal format. The format of the journal is also very much similar. Sales, return, journal, description, amount, VAT, total. Next, we'll go to purchase journal or purchase daybook. Purchase journal. Purchase journal. Actually, look at the dude. What is this purchase journal? The purchase journals records all the credit purchases for resale. Okay. Credit purchases. Capital asset purchases are not included here. So simply put, the all the credit purchases, huh? The purchase of goods which held for sale, not cash purchases, not the non-current asset purchases. The cash purchases and the non-current asset purchases are not included in the purchase journal. Please highlight that. Okay, capital assets purchase are not entered here. Okay, and it goes to the general journal. Even the cash purchases are not included here. Please highlight that. Very much. Okay, very much needed. Please highlight that. Only the credit sales are included here. Credit purchases are included here. Okay, sorry. So source document is purchase invoice. Source document is purchase invoice. Okay. The format is very much same. The format is very much same. The purchase invoice, all the invoice formats are same. Okay. Nothing big different. All the invoice formats are same. The only one thing different is the purchase invoice. The topic. Okay. Here you will get the date, the number, the name, in the same column like this, description, quantity, price, total, and signature. Okay, signature or seal. And the purchase journal. The purchase journal format is like this. Purchase journal format. Amount with total. The invoices, the source documents, and the journals, all these formats are same, huh? For the sales return, purchase, and the purchase return. So you might ask, sir, without starting the cash payment and the cash receipts, why was starting with the sales journal? Because there is a theory for that. Theory in the sense, there's a reason for that. Because starting off with the cash is very much simple, but if I start with the cash, you might get confused with the cash sales and the credit sales. Understood? What the most of the students does, they unknowingly enter cash sales in where in the sales journal, because they might get confused where to put the cash sales, cash receipts or sales journal. Understood? So that's why I am starting off with the sales return, purchase, and the purchase return, because you will get the clear understanding about the purchases and the sales. Because purchases and the sales are very much important in a business. The business mainly run through to the purchases and the sales. That's the basic. That's the basic activity of the business, ne? The sales and the purchases. So you have to get a better knowledge about the sales and the purchases at first. At first. Understood? So that's why I'm starting off with the sales and the sales purchase returns, purchase journals. Okay. So yes, purchase journal is done. Next, purchase return journal. Purchase return journal. Purchase return journal. Same like this. Goods returned from customers. Here, goods returned to supplier. Goods returned to supplier. In a nutshell, we tell return outwards. Return outwards. Return outwards. Since the purchase is debit, so purchase return will be debit note. The source document for the purchase return will be debit note. Since the purchases are debit entries, purchase return, debit note. Since the sales are credit entries, sales return journal source document will be credit note. Very much easy. So that's how you need to memorize and keep remind things. Okay, very much easy. Sales credit, sales return, credit note. Purchase debit, purchase return, debit note. Simple. Okay, so yes. And the invoice and the journals. Same format for the invoice. Per, sorry, debit note. It will be date, my mistake, date, number, and name, description, quantity, price, total, signature. And the journal, purchase, return, journal, description, amount, VAT, total. Okay, so These are the basic knowledge of the sales return, purchase, and the purchase return journals. And these are the formats of the invoices. Okay. So you don't have to memorize the format of the invoices. So that is extra knowledge. But the format of the journals are very much needed. Journals are very much needed. Okay. So yes, after that, we can do some questions regarding the sales return, purchase, and the purchase return. So if you move to, mm, if you move to the question number 4. Okay, 4.2 worked examples in the page number 8. In the page number 8, there are some questions regarding these journals. In the page number 8. So if you go to the page number 8, there are some questions. Example 1, example 2, example 3. Okay. So those three examples can be done. Understood? So I will explain how to do the journals as well as how to convert those journals into ledgers. Okay, I will explain that. So yes, just for the time being, what we have to do, just draw these invoices in the corresponding notes and the journal format is there, it's completely fine. And if you can try to do the question, example number 1 in the page number 8, if you can only. So yes, that's a bit. I will explain the question number 1, question number 2, and question number 3. Understood? So yes, I will give you 5 minutes. Just take the necessary notes and try to do the question number 1. If you can only, if you don't understand, if you don't know how to do this question, just that's fine. I will teach you. Okay, so before that, take the necessary notes. Okay, just 5 minutes only. Question number, example number 1. So they are asking to do the sales journal. Okay. So they are asking to do the sales journal. Okay. Okay. This will be your sales journal. Okay. So yes, let's do the question. Question. Kasun traders bet rate 15 percentage made the following credit sales during the month of March 2024. Okay. So write up the sales journal March 2, 9, 17, 26. Okay, they have the date also. So since they have the date, we have to draw the date. Ne? Okay. So I will erase this and add a column here for the date. Okay. So date, description, amount, VAT, total. So the first transaction is on the March 2. On the March 2, what is the transaction here? Customer name, all the transactions are credit sales. So customer name, Nadika Stores. Okay, Nadika Stores. Nadika Stores. Invoice number 30, sorry. Invoice number का मतलब कौन है? Okay. Invoice number 301 and amount is 40,000. Okay. For the Nadika stores, amount is 40,000 and Nadika stores is what? Nadika stores is registered for the 15 percentage VAT for 40,000 for 15 percentage. 40,000 to 15 percentage is how much? 40,000 to 15 percentage. I think it's 6,000. 40,000 to 15 percentage. 6,000 and 6,000 will be the VAT. So total amount will be 46,000. Understood? Yes. In the March 9, Pradeep Limited, invoice number 302, amount is 60,000. So for the 60,000, we have to pay 15 percentage VAT. So the VAT will be 9,000, 9,000. So total will be 69,000. 69,000. So for the March 17, Vimala and Sons, invoice number 303, 25,000. So 25,000 is the amount and 15 percentage VAT. So I think it is 25,000 multiplied by 15 percentage, 3,750. 3,750. 28,750 is the total amount. Okay. So for the March 26, Chamari, invoice number 304 and 35,000 is the amount. So 35,000 multiplied by 15 percentage. 35,000 multiplied by 15 percentage, 5,250. 5,250. So the total will be 40,250. Very simple. Very simple. So after entering these things, okay, if you want, you can write VAT 15 percentage. That's okay. And after entering these things, you have to get the totals. Amount 40,000 plus 60,000 plus 25,000 plus 35,000, which is equals to 160,000. 184,000. So 24,000. So here you have to write transfer to general ledger. For the total columns, okay, after finishing the total columns, in the description you have to write transfer to general ledgers. Okay, this is what you have to write. Understood? So after finishing this entire thing, what you have to do, I will erase this. You know the workings, the workings are simple. I will erase this. You have to transfer these things to where? To a general ledger. So based on the three columns, you have to create three ledgers. Based on the three columns, you have to create three ledgers. What are those three ledgers? First ledger is what? First ledger is your sales account. First ledger is your sales account. Second ledger is your VAT account. VAT account. Since this is a credit sale, the third ledger will be trade. The third ledger will be trade debtor account. Since this is a credit sale, your third ledger will be trade debtor account. Okay, okay. Please be with me now. Please be with me now. Now what you have to do? You need to transfer these total to the corresponding ledger accounts. Understood? Okay. So, first of all, what you have to do, this total amount, okay, this total column goes to where? This total column goes to sales account. Understood? This total columns goes to, okay, this amount column, the total of this amount column goes to sales account. Understood? Total of this amount, confusing name, total of this amount. Okay. Let's say like this. Okay. Yes. This amount, which means the amount column goes to sales. The amount column goes to sales. This VAT column goes to VAT. That column goes to VAT. Total column goes to trade debtor. Okay. Amount column goes to sales. VAT column goes to VAT. Total column goes to trade debtors. Very simple. Okay. And you don't have to write each of these things. You don't have to write each of these things. What you have to do, you have to just write the totals. That is very much enough. You have to just write the totals. Okay? Main. These elements for the Nadika, for the Pradeep, individual amounts, you don't have to enter the individual amounts. What you have to do, just enter the totals. That is very much enough. Okay? Don't enter the individual account, just enter the totals. So, the total of this amount goes to sales. Sales are credit. Huh? Sales are credit. In the earlier classes, when we are discussing the double entries, when we are discussing the ledger accounts, I have explained sales are credit entries. Huh? Since the sales are revenue, sales are credit entries. So, the amount of this, the amount column, the total of this amount column goes to sales account. So, sales are credit. So, credit 160,000 as trade debtors. Trade debtors. So, since the sales are credit, this sales VAT is also credit. Since the sales are credit, the sales mistake ne credit ne sorry confused. Trade debtor 160,000. Okay. Yes. Since the sales are credit, sales VAT is also credit. Since the sales are credit, sales VAT is also credit. 24,000, and here you have to write as sales. 24,000, here you have to write as sales. Because students, when I have explaining the accounting equation, I have explained these VAT scenarios. Huh? This VAT is not a new thing for you. Actually, VAT is not a new thing for you. When we are discussing the accounting equation itself, I have explained this VAT. Understood? So, VAT is not a new thing, and Since this VAT is incorporated with the sales, so this will be your sales VAT, and sales VATs are liabilities. I have explained to you. Sales VAT are liabilities. Okay. So liabilities are always a credit entries. Okay. So either way you can remember it. Since the sales VAT are liabilities, so VAT will be the credit entry. Or else, since the sales are credit, sales VAT is also credit. Both, huh? So the easiest way is, since the sales are credit, sales VAT is also credit. So that is the easiest way you have to understand the VAT. Okay. So since the sales are credit, sales VAT is also credit, total comes to debit. The total 184,000 come to debit as sales. Very simple. Very simple. So this will be your general ledgers. This will be your general ledgers. Understood? So this will be your general ledgers, and the double entries for this. The double entries for this. I will write the double entries as well. The double entries for this. Trade debtor control account debit 184,000. Sales account credit 160,000, and VAT account credit 24,000. So these are the double entries. Double entries are very much needed, students, because in the these are the exam paper questions. Huh? These double entries will be tested on the MCQ paper. In the MCQ paper, when in the question numbers 4 or 5 or 6, mostly in the 4 to 6. Okay, question number 4 to 6, they are testing the double entries with this VAT. Okay, so this is a exam paper question. Okay, so generating the double entries is very much important. In the unit number 2, I have explained how to generate the double entries. Understood? So generating a double entries is a very much important, and you know how to generate the double entries. The rule of the three-step model. The three-step model. I hope you have you can remember the three-step model to generate the double entries. What are the three-step model? The first step is find out the elements. The second step, write down the effects. The third step, the rule of thumb. Okay. By using this three-step model, you can generate the double entries, whatever the transaction you want. Understood? So, yes, coming back to thing again, sales credit, sales VAT credit, total debit. So, the double entry will be, entries will be trade debtor account debit, sales account credit, and the VAT account credit. Okay. So, yes, I'm explaining the same thing again and again, students, because these are very much important, and these are the exam paper questions. In the 2027 August 3, you will be having your A-level exam. Okay, just 11 months remaining for your A-level exam. So, please study hard. Understood? So, yes, this will be the answers for the question number 1. And please write this. After that, I will explain the question number 2, the example number 2. In the example number 2, we have to prepare the sales journal and the sales return journal and the ledgers and the double entries as well. Okay. So, yes, so I think before moving to the example number 2, okay, I will give you a quick question. Okay, a quick question. So you will understand. Yes, it's a step-by-step thing. Yes. So start with the example number two. Okay. So yes, start with the example number two. In the example number two, try to do the sales journal. Okay. So the question is you have to do the sales journal and the sales return journal, but try to do the sales journal, and I will explain how to do the sales journal and the sales return journals. Understood? So yes, write down the answers and try to do the example number two, and I will explain. So let's do the example number 2. Sales return journal and ledger posting. Okay. Question: Sharika Trading Enterprises VAT 15 percentage had the following transactions in the January 2024. Okay, the transactions are here, and we have to create the sales return journals. Okay, so let's create the sales and the sales return journals. So this will be your sales journal. This will be your sales journal. Date, description, amount, VAT, total, date, description, amount, VAT, total. This is sales return journal. This is sales return journal. Okay, let's start the question. Jan 5th sold goods on credit to Samanali. So it's a credit sale. So okay, so Jan 5th sold goods to Samanali. So the invoice number is 145. Ah, again I missed the invoice number. So again I missed the invoice number. My bad, my very bad. Okay. The invoice number is 145. 145. Amount 30,000. Okay. So how much is the VAT percentage? VAT percentage is the 15 percentage. VAT is 15%. So 30,000. VAT is 4,500. So total amount will be 34,500. Okay. Second, Jan 8 sold goods on credit to Matili. Okay, Matili. So Jan 8, same amount. 146. So 45,000 multiplied by 15 percentage, 6,750, 45,000, 51,750. 51,750. Sold goods on credit to Sandamali, invoice number 147, total 28,000. Okay, on Jan 10, 147 and 28,000. Okay, 28,000 multiplied by 15 percentage, 4,200. 4,200 plus 28,000, 32,200. Okay. So next, Sandamali is done. Then Sandamali returned the all goods sold on Jan 10, credit note 18. So this is not an invoice in the sales return journal. Sales return journal. This is credit note. This is credit note. Okay. So Sandamali, earlier we did a credit sale for Sandamali. Now on Jan 15, Sandamali is returning the all goods because it's a wrong type of goods. So Sandamali return the all goods sold. Okay, credit note 18. All goods, same amount, 28,000. Same VAT percentage, 4,200. Same, 32,200. Same amount is returning. Understood? Sold goods for in Jan 20, sold goods for Sirimali invoice number 148 and 36,000 on Jan 20. $148 and 36,000. Okay. Next, on Jan 25, Sirimali returned 8,000 worth of goods which is expired. Okay. So credit note VAT 2% on return. So delete that. Okay. The VAT 2% on return, we don't need that. Cut it off. Okay. Cut it off. The VAT 2% on return on the page number 9, the within brackets VAT 2% on return, that is unnecessary. You have to cut it off. Okay. So cut it off that, and that is irrelevant. On Jan 25, Sirimali returned 8,000 of worth of goods. Credit note is 19. So you have to calculate 15% for the 8,000. So 8,000 multiplied by 15% is 1,200. 1,200. 1,200. So 9,200. Okay. 8,000 multiplied by 15% is 1,200. So in the transactions, they are mentioning like Sirimali return 8,000 words. So they are mentioning VAT 2% on return. So please cut it off. That is unnecessary. Okay. Please cut it off. It's a typo. Unnecessary. Please cut it off. Okay. So same VAT percentage is applicable. Okay. So the sales journal and the sales return journals both are done now. And let's get the total values. 30,000 plus 45,000 plus 28,000 plus 36,000, 139,000. Okay. 4,500 plus 6,750 plus 4,200 plus 5,400, which is 20,850. Okay, if you add this plus this, 39,000. If you add this plus this, you will get this number, which is 159,850. I'm giving you tricks, huh? I'm giving you tricks in order to save the time. If you add this plus this, you will get this, huh? Rather than adding these four, you add this plus this, you will get this. And here the amount will be 36,000. Here the amount will be 5,400. Here the amount will be 41,400. 41,400. This is very simple. So in the description you have to write transfer to general ledger transferred to general ledger. Okay. So, so journals are done now. Journals are done now. Now what we have to do, we have to convert those journals into ledgers. Okay. So ideally, what we have to do now? In the sales journal, in the earlier example I have explained, in the sales journal, this amount column goes to sales account, sale account. Okay. This VAT column goes to VAT account. And this total column goes to trade debtor account. Okay. In the earlier example I have explained. Here is also same scenario. This amount is go to not the sale account, sale return account, sales return account. This is VAT account, very simple. And this total is goes to trade debtor account. Trade debtor account. Okay. Before going to the ledgers, I will explain the double entry. Before going to the ledgers, I will explain the double entry. So I start off with the sales journal. The double entry for this is very much simple. You know that. First one, we are starting with the trade data because this is a debit entry. So trade debtor account debit 159,850. Okay. Sales account credit 139,000 and VAT account credit 20,850. 20,850. So this will be the double entry. Same as like this. Here, easiest way to understand, easiest way to memorize the double entry is this. Since the sales are credit, sales return will be debited. Easiest way, just flip it out. You can't double entry. In the double entry. Just flip it out. Okay. Turn other way around this double entry and you will get the double entries for the sales return. Okay. Be with me. This one is debit. Here trade data is debit. Here the trade data is credit. This amount, not this amount, this amount. Okay. Here the VAT account is credit. Here the VAT account will be debit. This amount. Here the sales account are credit. Here the sales return account debit 36,000. Very simple. Very simple. Just turn other way around. Just turn other way around the double entries. You will get this. Okay? No hard things. No hard what? Amardhyanayamana. Just remember this. Just get familiar with this and turn other way around. You will get the sales return. Sales journal, sales return journals, sales journal double entries, sales return double entries. Understood? Okay. So this is a combined question. Okay. These are not separate questions. Huh? These two journals are combined from the one question. Okay, combines from the one question. So when we are doing the ledgers, when we are converting these journals into ledgers, we have to maintain an approach. Okay, so just be with me. I will let you know. So first of all, we have to put three T accounts for the sales. Okay, three T accounts for the sales. Okay, we'll start off with sales account and vet account and trade data account. Okay, understood. So now what we have to do? We have to transfer these total amounts to ledgers. We'll transfer it. This amount column goes to sales account. Okay, amount 139,000, 139,000 trade debtor. VAT column 20,850, 20,850. This is sale. Debtor 159,850. This is also sale. This is also sale. Understood? Okay. So you convert these total sales account, sales journal total to the ledger accounts. Completely fine. You convert the sales journal totals for the ledger accounts. Okay. Here also we have three accounts. Sales return, VAT account and the trade debtor account. Remember, here we are not going to create separate three ledger accounts. We are not going to create. Instead of that, we enter these VAT account and the trade debtor account for the existing accounts. Okay. What we have to do, we have to create one and only the sales return account. Sales return account. Just create a new account. Okay. What we have to do, just create a new account. Okay. You can't what? You can't create T accounts with the same name. Okay. You can't create two data accounts, two sales account, two VAT accounts. No. You can't do like that in the ledgers. Okay. If you create a VAT account, all the VAT related transactions needs to be entered one and only in this account. Huh? You can't create for the sales journal this VAT account and the sales return journal for the VAT account. No. You can't create separate VAT accounts. Create one account and enter the all existing transactions in that one and only account. Okay. So that is the basic. So sales account is ready, VAT account, trade debtor account is ready. Now what we have to enter? We have to enter the sales return account. So we'll enter it the sales return. So we have to create the sales return account. Yes, sales return account. Sales return account. And you know the sales return account is a debit entry. It's a debit entry. So sales return 36,000 as trade debtors. Vet account debit 5,400. So we have to create we don't have to create and we are not creating. We have to enter that 5,400 in existing account, 5,400 as sales return. Trade data account, we are not creating a new account. We are entering the entry in existing account. So trade data account 41,400. Where the trade data? Yes. I made a mistake earlier. Okay. The 159 needs to be in debit entry. My mistake. Bad. Trade data account credit. Trade data account credit 41,400 as sales return. Understood? So, students, sales return debit, sales return account. VAT debit, VAT account. Data control account credit, data control account. Okay. So please remember, we are not creating a new account for the new journals. Okay. If we have entries for the existing accounts, we have to enter those things in the existing accounts. Okay. So what the most of the student does, they will adjust this sales return in where? In the sales account. Okay, actually it's happening. Most of the students don't know how to enter the sales return. What the most of the student does actually, debiting the sales return in here instead of creating a sales return account. It is completely wrong. Very, very sincere apologies for that. A very big network issue happened there, so that's why it got stuck all the time. I couldn't uh, watch it that. Yes, so because I have in my computer, I can see the what the my video here. It suddenly freezed. So yes, that's why I couldn't watch it. So yes, again, my sincere apologies for that. So where we was again? Where we was? Yes, it's sales and the sales return and sales return is yeah. So actually, what the most of the students does, the mistakes that students does it, instead of creating a sales return account separately, they enter this sales return in where? In the sales account, which is very wrong. Which is very wrong. They are debiting the sales return amount in the sales account, which is very much wrong. Okay, so please remember, if you are doing, if you are doing a sales return account, create a separate one. Don't enter the sales return in the sales account because it will not give a clear picture in the accounting. Okay. If the examiner asks why we are not producing the sales return in the sales account, because the reason is it will damage the accounting concept of faithful representation. There are fundamental characteristics of accounting. Okay, there are some fundamental accounting characteristics. So this will damage the fundamental characteristics of faithful representation if we offset that sales return in the sales account. That's why we are not offsetting it. Okay, but in the PNL, yes, we are offsetting it, but in the ledgers, we are not doing it. Understood? So the reason it will damages the faithful representation concept. Understood? Yes. So sales return is there, debtors, VAT, and the trade sales account. So yes, that's the thing, student. I think it's heavily raining in my area, so that's why the network connection is not pretty much stable here. So yes, that's the pretty much of today, students. So we have discussed the sales return journals here. Okay, sales return, and the entries for the sales and the entries for the sales return and the ledger accounts. All these things have been discussed today. So in the next class, we'll try to do the example number 3, example number 4, and the example number 5 as well. Okay, the purchase return, and the cumulative question of all of these things. Okay, so please remember what I told earlier. Don't enter the sales return entry in the sales account, which is very much wrong. Examiner won't give you marks for that. Okay. So I think that's the pretty much all today, and this will be the answers. And this will be the last class of the month. And see you. Yes, the network is yes. We have network issues today. So yes, see you in the next class. I will give you 5 minutes. Please note down these answers in your tunes. Okay? Yes, so see you in the next Monday at 7 p.m. Okay, so see you. Thanks for joining.